What's happening, guys? Welcome back to the channel. Hope you're doing well. In this video, I'm going to give you 3 things that you need to watch out for in the next 10 days that will impact your bull market. Okay. Prior to that, I gave you 3 things to look out for the cancellation of the entire bull market and in particular alt season. It's an important video. Smash a like if you're looking for direction like I am. Been doing my research. I think this video will help you. Happy Monday to all, and let's get on with it. This week promises to be an important week. Couple of things that are happening. We've got jolts. We've got CPI on Friday. Friday is your most important day, and throughout the week, you got the likes of Fed Waller, Fed Miran, and other Fed members that will be talking. Right. So Tuesday, for example, you've got this Fed Waller speech. You've got all of these different things happening, but the next 3 weeks will be very, very important, in particularly CPI on Friday, right? You can see the forecast, the consensus. The consensus is going to be quite initially more or less the same, right? As opposed to, into the expectations. So going into next week, the next impactful thing that will happen is the Fed meeting on the 29th, followed by US-China meeting on the 30th for their peace, their trade war agreement or trade war peace process, as I like to call it. Now, of course, last week we looked at the 3 things you need in order to cancel the bull market. Those things haven't materialized. We haven't canceled anything yet. In fact, I left this chart exactly as it was based on my last video, and you can see here we are above this level of 109. But I guess if we zoom out, the crucial level here in the higher time frames on the daily, for example, or even the weekly, would be to maintain a level above 108,000. Now, when you may be asking, DXB, why 108? And I'll show you. It's very, very easy to actually understand why we need to go to that or need to maintain that level. And it's to do with this. So if you look at the Bitcoin chart, every time we've pumped throughout this entire cycle, what we've seen is a level of support for the pump before the next initiation of the move. So we've not really, this is why it's been very, very different and very difficult when you consider how this has played out so far. So we have a period of consolidation, and then we have a pump, right? Very kind of like easy to figure this out. We've got a dump. We've got obviously a resistance here, and we had a dump. And if you actually look at that in a very, very clear sense, perhaps even if I give you a springboard here, you can always see what kind of levels we've been to. Like, very, very clear. Like on the bigger time frame, it is so friggin' easy to recognize this. So this is what's happened in our entire bull market so far, right? This has been going on since 2023. Bitcoin pumps, right? Finds a support range, and then it pumps. So it's kind of been like basically just a stairway to heaven. Staircase to heaven, right? Literally, that's what's happened. Now, if you look at this level here above 108, I did say in the last video, and we will take the wicks into consideration, right? We would go above 109 over here, 110, but 108 really, if you look at that level where we are now, we've got a very good candle that's sitting right there to bounce from. So if we look at this whole entire area, you could see exactly what's going on. This wick here is quite interesting because there is still some liquidity that's sitting in this range between 100,000 to about 96,000. But the liquidity to the upside is building massively. So if you look at this and you look at this weekly candle here, you're starting to realize that if Bitcoin can hold above 108,000, and to the downside, if we can stay above 105 to 100,000 or 102,000, we have the opportunity or the ability to springboard one last push to about 132 or to at least break the previous all-time high. Now, one thing that's happening right now is the liquidations are skewed to the downside, meaning that a short squeeze is likely because there are, if you look at the, let's have a look at these liquidity heat maps, and I'm going to actually show you what's happening here. So this is just the 3-day, and you can see here 105 has a 218 million in terms of leverage. But I'm going to change this first of all to the immediate. Let's look at the immediate 24 hours or the daily, because we want to see where the liquidity is at. Bitcoin's coming after this 111 range. Look, this is absolutely ridiculous. Like, there's more liquidity just to the upside here than there would be to the downside. But that's also a matter of debate right now, because we have the whale who was short in Bitcoin. That's also on the other direction, and long in Bitcoin as well. But when you look at the 105,000 to about 2,000 level, there is liquidity there. And of course, some of the longs have been closed to the upside. But we will continue post 3 days. And let's look at the weekly. Okay. With the weekly liquidity, it becomes very, very clear, because most people are looking at 24 hours, 12 hours. Look at that. 115 will liquidate around 348 million. But there's billions when you consider the amount that's staggered here. And it's definitely way more than to the downside, for sure. So that could be something to watch out for. Like I said, for many people who don't understand what's been happening with the market and why altcoins have dumped the way they have, what we can say is, if we look at our old total 3 versus Bitcoin, which is slightly down today, let's go to the weekly on this chart, reset, and let's have a look at this in more detail, guys, because this is your bull market trigger. This is your bull market trigger, 0.29% or below, which is a level that we tapped. Now, I know everybody's screaming mad about the dump that happened. I got liquidated too. Everybody got liquidated who was trading. But I can tell you right now, it did accelerate alt season just that little tiny bit more, because it brought us to a range where it was physically impossible for the charts to go down to in a normal market flow. So this is what I'm watching right now. But I'd also like to tell you the greater danger that we're in. And many people don't like to hear this, but I'm gonna say it to you how it should be said anyway. So we've got swings ahead because of Fed activity and CPI. Correct. We survived that, no problem at all. What you don't account for is the exchanges. So Friday would be a day where the data is coming out, and I'm terrified of weekends, if I'm being honest with you, because of manipulation. Now we know the consensus in terms of the CPI forecast, and we know the consensus. So forecast and consensus are pretty much expecting no changes there. But again, you need to watch out for exchanges. And this is why I look at charts like this rather than relying on the piece of information or daily movements of a candle. I don't really give a shit about the daily movements of a candle. So Ethereum is showing tremendous strength compared to Bitcoin. However, although risk assets are bouncing, do not be complacent. Situation hasn't fully played out and things can change rapidly. I don't know why people FOMO anyway. We are anchored, by the risk anyway. We hold a lot of risk assets. So really, this is about survival rather than action. You will take action if you're buying a quality project. If you're buying a Bittensor Tau, that's a 10-year DCA. I don't mind that. I will make a video about specific projects that I think will have a 50-year, 20-year outlook in terms of how they play out. But if you're DCAing quality projects, but stop any shit activities right now. Okay, so there will be elevated risk as we move into that. It falls onto a Friday, and Friday is a day of manipulation. Now, in addition to that, of course, we need to talk about liquidity. Okay, liquidity is key to these markets. And, you know, again, liquidity streams deepens and tightens. At the start of September, I did highlight the emergent liquidity stress in the overnight lending markets, and it's now worsening. Now, of course, the secured overnight financial rate, or the SOFR, and the reverse repurchase agreement, or the RRP, both of these are at their widest and lowest in 5 years. So the fund spread has widened. Okay. Now the Fed standing repo facility, or the SRF, has been tapped for 8 billion. It's only been used for serious dollar liquidity stress. It's never used otherwise. So the rate has hit 29 basis points, the highest since 2020. We're not at the 2019. For those of you who remember, in 2019, there was a repo crisis levels, but we are in the beginnings of a warning sign. So this is all about liquidity. They will need to push QE, quantitative easing, to stabilize the collateral markets. Banking stress is also building. A lot of banks are, especially local banks, you know, are under massive strain. That means when US collateral markets, okay, crack, everything else falls. Equities retrace, gold surges, crypto corrects, and that's why you've seen a devaluation of the dollar and a drop in risk assets. That's the whole reason why we've been here, and that is the reason why we will continue to be here until liquidity flows into the market. Now we have seen a bit of slowdown in gold, but not to the levels there that, of course, we can clearly say we draw the conclusions that risk markets are completely back on. Okay, so I would say be careful. Okay, you have exposure. There will be that again. Number two, the Fed meeting. So we've got economic data. Then we've got Fed meeting next week. I'd expect, Jerome Powell has already hinted that 2026 will be a quantitative easing, you know, maybe the start is the end of the 2025, then this, you know, in Q4 towards the end, but most likely to fall into quantitative easing. Powell has a difficult job here because Powell has to be very careful with the way the economy is at the moment. No denying, hawkish Powell sends things over the cliff. And the Fed have admitted that they will do quantitative easing, so I'm not worried about that. Okay, now that takes place in about 8 to 9 days. Then we've got Xi Jinping, Donald Trump in Korea, or South Korea to be specific. They've already told us all this brinksmanship is to lift the mood in the markets. They will come out with a deal that sends all of these assets, I think, into price discovery, or it sends things back into crazy, 200-300% on some altcoins. I'm not promising it, but that is the level of the impact of that meeting. So mark on your calendar 29th of or 30th of October for that meeting, because what he's done is he's brought the trade agreement disagreement back into the fore. This is April, more like April again, the lows in April, or February even, the shock after he started pushing all these tariffs and signing all these executive orders. So do expect that to be highly impactful. So in summary, ladies and gents, the devaluation of the dollar is the reason why we are seeing a risk off environment. That has been the case for a very long time with Trump since he came in. The dollar has been devalued, and that's why you've seen safe assets like gold, silver, just literally go crazy. Exactly a year ago, during the Biden administration, there was a call for recession. Now, imagine it's now 12 months, exactly November to November, 24 to 25, the word recession has entered the phrase again. So there could be a further stress in the system. And I've always said to the team, big up the VIP community, there is something that's broken and we need to understand. We may well be living through recession right now. And of course, they never announce it until we are fully into it anyway. And this was a fear a year ago. That fear still remains. I'm not worried about the stock market dropping 8% here or there. It looks like the stock market is prompt up anyway, is patched up by big money. We need to look at we need to look at everything that's happening elsewhere. Oil is in free fall. Crypto is nosediving. Bond markets and bond yields in particular are collapsing and gold spiking. Volatility is soaring. Everything is screaming risk off except stocks. Then what happens when the bubble eventually bursts, right? Now that's the red flag that no one's talking about. And in my opinion, it will take a massive effort by us to make sure that we are selling these bags as we go up in the next, hopefully in the next 10 days after the two big impact meetings, Fed meeting and the Trump Xi Jinping meeting have taken place. So I have given you a complete breakdown onto what I expect to happen for the next 10 days. Use this as a time to fix your portfolio. Use this as a time to understand and evaluate your bags. Really, like I've taken some good time out to really understand what it is that we buy, what we buy. But there will be crypto projects that will, I would say, probably a sector that I'm eyeing right now is AI and DePIN. Two sectors really, AI and DePIN and RWA are the backbone or the future of cryptocurrency. I think that is the next $1 trillion destination because both of those provide tangible, those three sectors provide tangible meaning to cryptocurrency. Everything else is complete speculation. We speculate on gaming and it's great. We speculate, we will have a gaming season, but I'm talking about people holding crypto for 4, 5 years, 10 years or longer. I think decentralized AI, decentralized physical infrastructure networks and RWAs do offer crypto some type of utility where 99.95% of crypto narratives are just basically hype. But we'll talk about that in more details. Use my video as a guide. And of course, leave your comments. Again, big up to the MAGA brother who thought I was MAGA. I love your comment. Keep them coming. Take care, guys.